Hi, everyone. My name is Neil Pabari. I'm currently what's called the Global Head of Focus Markets at the London Stock Exchange Group. I work for the Data and Analytics Division, which is a division within the London Stock Exchange Group. Many of you might know it as Refinitiv, or its previous name, Thomson Reuters. So we were the financial services division of Thomson Reuters that is now part of the London Stock Exchange Group. My principal role is really to support our data and analytics business in key markets around the world, where we think there's tremendous growth opportunity, where there's a maturing financial ecosystem, and where we think we can contribute to helping the economies develop. A lot of the subject matter for today's conversation really fits very well with what we both stand for and are looking to help drive in a lot of the markets we operate in. So the subject of data, it's very much the DNA of the data and analytics division within the business I work for. And when we talk about artificial intelligence and machine learning and the technologies around that, again, from serving some of the biggest financial services firms in the world, the largest regulators and exchanges, all the way down to MSME type businesses, we think there's a role for data and analytics to play a material role in answering and supporting the question that's being asked today around financial inclusion. So I think looking forward to a really interesting conversation.
Great. Thank you for being here. Thanks for your time, really. Leticia, would you introduce yourself?
Sure. Hi, good evening and good morning to some of you. My name is Leticia Chow. I'm the Vice Chairperson and Chief Risk Officer of Link. It's a fintech company headquartered in Shenzhen, China, but currently I'm based in Hong Kong as we have a subsidiary out from Hong Kong. Link specializes in the offering of innovative supply chain financing solutions using advanced technologies such as blockchain, big data, AI, and cloud services. I would like to thank the organizer for hosting this event and for inviting me to participate in the discussion of this financial inclusion agenda. It has always been a challenge around the globe that small and medium enterprises, especially the smaller enterprise or companies in the tail end of the supply chain, they encounter difficulties to access their much needed credit. Policymakers in many countries have embraced financial inclusion as a development priority. However, I believe there are still a lot more work that needs to be done in order to make a real impact for the benefit of these millions of underserved SMEs. So back to you. Thanks.
Thank you.
Great introduction. Yes. Justin, would you want to follow on this?
Hello, everyone, and thanks very much for the opportunity to join the conversation. My name is Justin Weiss. The past 7 years, I've served as the global head of data privacy, very large multinational investment group called Naspers, and more recently Prosus, which is the Amsterdam-based internet investment division of. And what I do is I try to work to support both the compliance, data policy, forward-looking, trust-building ambitions of companies that are in our portfolio. We have companies that are grouped by segment. And so we have EdTech investments, we have online classifieds investments, we have food delivery investments. Very relevant to the topic for today, we have a very important payments division. And Laurent, our CEO of that division, is here with us. And I'm grateful, Laurent, for the invitation to join you. I am a lawyer, and I have been practicing exclusively in the data privacy space for a very long time, longer than many people even recognized this was a branch of law. I started my career working in the online advertising industry, subsequently spent many years at Yahoo, where I was responsible, working from Washington, D.C., for international privacy and regulatory matters for that organization. Subsequently, I brought that international experience to base myself in Hong Kong, where I currently work. For Naspers and Prosus. I really focus the majority of my time on data privacy and artificial intelligence regulatory developments from a comparative perspective. So I spend a lot of time looking at the developments in the United States, Europe, South Africa, Brazil, India, China, Russia, and try to help make sense from a global perspective of the trends and the trend lines that we're seeing in the way that digital businesses, including in the financial services sector and in the fintech space, are mapping their initiatives against the policy, public, and regulatory expectation base. So as I said, I look forward to the conversation, and I thank you for the opportunity to contribute here.
Great. I mean, fantastic, panel with a very wide range of professional experiences, in diverse industries, a really global perspective. And we even have a lawyer. So what else, we can really start, that conversation. Would you want me to start with the first question, or please, Amelia, if you want?
No,
The
go
order
ahead.
to you. I think really, what was interesting for us, in the leading to this panel and this conversation was, first, if you relate to your own professional experience, professional and personal experience, how you see, really the latest evolution of AI, the latest, widespread use of data across all geographies, right? And also the subsequent, regulation. Have you seen, these phenomena coming together to actually, help the agenda around financial inclusion, or actually maybe sometimes hamper or slow down the actual, financial inclusion? I think that's a very broad question. I realize this, but I would be interested, to see from your point of view and your own, beyond your own organization, how you see these two, data, AI, and financial inclusion, working together or not. Who wants to?
Yeah, let me start and lay some sort of thoughts out, and it'd be interesting to see your comments. To answer the question around data and how it's being used to support, huge amounts of innovation, I think I'm probably well placed because we sell a ton of data to the financial community. The answer to your question around, does data support financial inclusion? The answer is absolutely yes. I think conventional structured data has been used in financial markets ever since they existed, and the technology that has now evolved, particularly with a lot of the big machine learning capabilities, is enhancing the ability for institutions to use the data in so many different use cases. So clearly, when we go to a retail banking institution, there's a huge amount of data that's being used in the background to check, Laurent, on who you are, for example. And a lot of the AML, KYC screening, and so on is reliant on huge data sets that are being churned in the background to make sure that when Laurent opens his bank account, he is a relevant, good individual. And so all of that sort of stuff has massively enhanced how the world does better banking, so to speak, in that simple example. When you talk about inclusion, that's also then reduced the barriers for how people get access to financial services. Now, is it perfect? Clearly, the answer is no, because we still have a long way to go. But if you think about the way people now are able to access financial products, just simple basic banking services, and then as that ecosystem evolves to more, let's say, advanced capabilities, international payments, or investment products, insurance products, and so on, again, the same tools and capabilities and technologies are being applied by institutions, again, partly through machine learning, definitely through artificial intelligence, to try and find relevance so that these services do good, so to speak, as part of the debate that you're asking. The challenge, though, clearly with data comes all of the privacy issues. The challenge is, are we able to do this efficiently on a cross-border basis? And is it scalable, first of all, given so many different regulatory regimes and different data privacy regulation and legislation? And I look forward to Justin's thoughts on how we navigate that, because I don't think the answers to that are that clear today. And in there is both a big opportunity area, if we can, as a community, work out how do we bridge the standards between different jurisdictions. But equally, there's a lot of, as we've seen in the public press, a lot of challenge around maybe getting things wrong. Underlying that ultimately is how do we lower those barriers to enable the inclusion question, which is the purpose of today's question. And I'd say that in certain areas, we're doing far better than in others. And let me give a couple of examples, which will be a good topic for debate with Letitia. In the SME sector, particularly in the corporate sector, there's perhaps a little bit less sensitivity to how personal data is treated as far as the corporate entities are concerned, and especially where the corporate entity is more conscious and in control, perhaps more obviously, of the data that it owns for itself. And what I mean by that is a corporate entity, when it decides to do business, typically with financial institutions or with other counterparties, is required in a business and a commercial relationship to start sharing data and content about itself. And if you think about supply chains today, there are huge implications on large entities, particularly if their supply chains are polluted with entities that they shouldn't be doing business with. So reputational issues, for example. So the use of data and the use of how corporates manage and control their own data and the impact around, how they're perceived by the market is really, really important. I think those use cases and the supply chain financing example that, Letitia is going to share shortly is one we're really encouraged by when it comes to the concept of inclusion, because it's starting to lower that barrier in the case of corporate entities to enable inclusion at smaller and smaller levels of, corporate size. And that's starting to create, all the good things that the economies want to try and do: stimulate jobs, stimulate SME formation, entrepreneurship, and all the good things that arise from that. The individual question is probably the harder question. And I think there's some legislative and legal challenges to work through, which let's hope Justin can help point us all in the right direction. But I'll just finish off by saying, on the example I've just given you around the SME conversation, the technology there is now definitely being applied in terms of artificial intelligence. And I'm sure Letitia's got great examples where lenders are using not historic data around historic financial information, but current transactional information to predict things like potential defaults, and also predict who is potentially a bankable SME entity, and therefore improve the way we interact with that entity, either from the perspective of funding or perspective of access, or simply, from a KYC perspective, this is a reputable company that we should do business with. So these are really interesting examples. And the predictive intelligence, I think, is going to enhance how a lot of those types of companies that understand how their data can be used in a positive sense, I think the potential is great.
Yeah, absolutely.
Yeah,
I think
you
Letitia,
really touch on all the major points. Maybe I'll just add some. As we all know, like traditional bank financing requires a full assessment of the borrower's creditworthiness based on a set of parameters such as financial track record, owner's net worth, collateral value, etc. However, as we know, many SMEs or individuals, they have very thin credit history, which can provide adequate related information for banks or financial services providers to make meaningful credit assessment. Therefore, many of these enterprises or even individuals are being excluded for affordable financing or services. With the advance of big data and AI analytics, it really enables financial service providers to access to alternative information. As Neil said, we have utility bills information, internet data, other transaction data, and then we'll be able to make a better credit judgment. Actually, at LinkLogis, we have been leveraging alternative information such as trade data, invoice data, payment data, or tax data, using our technologies and data analytics to build up a credit score and credit history for these SMEs. This has greatly facilitated our data-driven decision-making process. This alternative information helps us to better understand and, as Neil said, predict the borrower's payment pattern, analyze their cash flow, and detect early if there's any change in the borrower's ability to repay. It will also help to predict any credit default in the early stage and to enhance fraud prevention so that we can implement appropriate credit risk mitigation ahead of time. So apart from the creation of credit scores, the use of big data analytics actually can solve the problem associated with KYC requirements, as Neil pointed out as well, as we can use public domain data to confirm the business owner's identity on more timely basis. Moreover, we use AI technologies to perform document and image processing with the help of facial recognition to streamline the whole onboarding process. So all in all, the use of these advanced technologies has greatly enhanced financial inclusion for this underserved population.
Great. Justin, I think it's up to you to offer your perspective. And I would just add maybe something which is beyond financial inclusion. What do you see as potential risks for actually the reverse, financial exclusion based on data, actually?
Yeah, well, I think the first intervention that I'd like to put on the table that we can all discuss, and it may feel counterintuitive coming from somebody who's on the legal side or thinks a lot about the risks of data, but I'd actually like to start with the idea of the responsibility to use data in order to ensure fairness. So that's the key term that I want to table right now, is this notion of fairness. You know, financial inclusion in part is designed to remedy gaps in fairness across society. The fact that there were limited data points, limited indicators of what made someone financially worthy or eligible, for example, for a loan or credit, is something that big data and fintech is working hard to remediate, that sort of element of inequality. So I hope, I see everyone nodding, that you would agree that fairness in some respects is at the heart of initiatives try to figure out how you can deploy services to the unbanked. Part of fairness is figuring out what data is available to create an accurate picture of people. An incomplete data or selective use of some kind of data and not other kinds of data, I think creates risks of its own, that you're contributing to exclusion of certain individuals. And so the first point, I think, very important when we're talking about a use case is, what are we after? What is sort of a fair and appropriate social result? Then in the next stage, we can talk about how we get there and the right ways to make sure that we sort of regulate it in that direction. And so when I think back, I promised you I would always try to make references to multiple jurisdictions. We go back to the 1970s. One of the first United States privacy laws to come forward was the Fair Credit Reporting Act. One of the most durable essentially references we have in US privacy law, and it was all about the risks to individuals if the information that credit bureaus were collecting wasn't accurate about them, or there was a lack of transparency, or the inability to challenge something, because that has real impacts on people's lives, their ability to get credit, but also, it affects their livelihoods, their ability to get jobs, their ability to access government roles, their ability to get housing. So it's really at the heart of so many social processes that we recognized for a very long time, back to the 1970s. So that notion of the importance and relevance of data to fair outcomes is not new. It's not from the age of big data. It's a durable concept that we've had for a long time. What's fascinating about the big data phenomenon and the developments in artificial intelligence is the promise. And in many cases, I think it's fair to say it's a promise. Not always realized yet, but we're working toward that. The promise of better decision-making with more data. The promise that if you were able to consider someone's social media profile, if you were able to consider someone's online transaction activity in a different way through a different lens using artificial intelligence, you could supplement the government identifiers we always use. In the paper, that's a reference for this conversation. Obviously in India, for example, we have the reference to Aadhaar. We have in other jurisdictions certain government identifiers that are often very useful in these determinations. If you could create a more complete picture, perhaps it would be a more accurate picture, and therefore a more fair picture of individuals that are eligible for some sort of financial service offering. I think that that's a very useful starting point, because as a society, we have to agree that that's desirable. If we agree that that's desirable, then we can move forward on common ground and talk about how to regulate that in a safe way, using that fairness as the paradigm that we want to maintain. But we must have that agreement first. Assuming we have that agreement, then we can get into the deeper topics about, okay, if we want to use more data, what are the safe ways to do that? How ought we do that? Is there anything we should exclude? Is there anything we should limit in time? Is there anything that we should allow to be used only for specific purposes, but have special silos for it? And then you go from the macro to the micro. How do you implement this in a safe way? And I think that what I'm observing now is that tension in the regulators and governments and individual businesses between this desire to open the floodgates and get all of the promise and the benefits, but at the same time, a lack of experience on the ground about how you divert the flow of the water. Sometimes I like to think of the metaphor of rivers. If you have no dam on the river and the river's just flowing, you have lots of activity and lots of commerce and lots of great stuff, lots of velocity. But the water can also go over the banks. And if people are standing on the edge, you can drown people. So we need to find ways to harness that power and keep it flowing in a controlled way. And I think most global governments recognize the desirability of that outcome, the desirability of harnessing data for public good, and financial inclusion is a public good. So the task of regulators, the task of businesses that are trying to come up with frameworks and ethical guidelines for themselves, is the task of how to harness the horse, how to harness the river, but still preserve the velocity and the benefits. And there are lots of ideas about how to do that, which we can talk about subsequently.
And Justin, I just want to explore the concept a little bit further around fairness that you're referring to. In your mind, are we there as a community talking about the concept? Because what you've just brought up, I think many institutions, particularly capitalist-minded institutions, perhaps don't think of that question in as philosophical context as you've explained. And I'm not saying that they don't do the right thing or their agenda is not the right thing. What I'm saying is that they're looking at how to use data to try and obviously improve the financial returns for their organizations and so on. But the concept of fairness is something that perhaps it's sort of a bit of a question at a higher level, maybe at sort of governmental level. And is that concept being debated in the right manner?
My own view, I'd be interested to hear what others think. My own view is that it's being partially debated, but not using the same terms at the same time. So I see a lot of debates right now about fairness in the context of economics, of an economy. So the fairness of access to data from a commercial perspective. When you have big data players that have consolidated access to large amounts of data, do they have disproportionate power, and is that somehow fair or unfair to other players or perhaps smaller players? And how does that impact competition? There's a lot of discussions right now, I think, around competition fairness. I think there's a lot of discussions about fair use of data from an intellectual property perspective, from an investor perspective. I think that there are discussions about fair use of data from an individual rights perspective. And that's where the whole personal data privacy law debate comes in. But my own view is that those vectors haven't converged yet. And really the only way they can converge is with some level of government policymaking, right? The government has to basically say, look, these are equities we have to balance. And here's what we want society to look like in the future. And so here are the nips and tucks and trade-offs that we have to be willing to make while we do that. I perceive those discussions as quite siloed now. And as a result, you end up with siloed legislation. You get a piece of data protection law that basically says the default is we expect individuals to be brokering access to and sharing of their personal data at all times. And organizations, whether they're governmental or private, ought not be taking that stuff and using it without individualized interventions from people. And I think that that's in conflict with the scalability ambitions of the fintech sector. Now, obviously, there are specific circumstances where that type of individual control and intervention is absolutely appropriate, and we all intuitively know that that feels right. But let's take the example of credit. To be honest with you, while it's Well, it's very time consuming for us lawyers to put up a lot of privacy policies and notices that you all click for us and say, okay, I agree, I read it. I think it probably took you 2 seconds, whereas it might have taken me 5 hours to write that thing. You may well have agreed to something, but is that meaningful? I would argue not particularly meaningful from the individual's perspective. It's more a gatekeeping function to allow people to get to the thing that they want. And ironically, even though credit is considered a very sensitive, kind of a high risk topic, if I look, for example, to Europe, credit determinations are explicitly included in the artificial intelligence regulation that's recently been proposed as a high risk activity. So you might think that that's the kind of thing that we want to make less frequent, or the thing we want individuals to really, really read and understand. But the reality is, one of the easiest consents to get in the world is someone that wants to get a loan. Somebody wants to apply for a loan, all I have to do is, hey, you have to agree to the world, and then I'll consider you. People will very quickly agree to quite a bit, I think. It's just the nature of the context of the transaction for individuals. So I don't think that that aspect of data protection law or privacy law is yielding a lot of necessarily fairness in and of itself. I think we have to look more broadly to other areas of people's expectation and define guardrails. And in the paper that Laurent and Amelia sort of put forward, they do talk about these guardrails, almost in some cases self-regulatory, or maybe eventually they can be regulatory in a country. If we can agree to some guardrails that keep things fair, we may be able to move beyond just privacy and data protection law into broader conversations about appropriate uses of data for these types of products. And I think India is frankly leading the way in that conversation. We have an entire working group commissioned by the government to talk about non-personal data. Like, let's take away the privacy identifiable information issues and just talk about the policy implications of ubiquitous big data sharing in aggregate about communities, regions, for many, many applications. So I'm optimistic, Neil, that there will be greater convergence of these topics. But I agree with your premise that we are not yet at a point of very sophisticated convergence in how we're thinking or talking about these things.
Actually, I also want to add about the fairness. When we say fairness, it depends on who you're dealing with, right? Like for those individuals, maybe their data would be being used, but lawyers are very good at drafting a very long list of the terms and conditions. But I suspect, and I would imagine, a lot of those individuals may not even look at those or read those terms and conditions carefully, and then they just sign up. If for those that who refuse to sign up those terms and conditions, they may not be able to use certain services. So in that sense, I sometimes wonder, when we say fairness, but have we done enough to protect those customers who do not really understand all these complex terms and conditions that they sign up to?
Yeah, I think, we actually, like the guest panels today actually mentioned a few lenses of issues, right? Some of it's actually, it's on its own nature is actually conflicting. Number one is we all acknowledge the power of data and analytics, but we also acknowledge the abuse of using that is actually also quite dangerous. And then we also bring out another concept about actually the power of the smaller SME or the individual they actually have, even if we set out the intention of using data to actually allow them to access financial inclusion. Justin mentioned very carefully that if you are desperate to get financing, what do? You can't actually just say that, no, I want to have a privacy and I can't, right? Because you actually giving away the power of your own data to the people that actually with the power to leverage your data. So with all this sort of contradictory and potentially like driving force and driving actually very different sort of outcome in the whole ecosystems, One of the other interesting sort of questions that we have is, what do you think is the role of the governments in creating this sort of fairness environment, in making sure that the data privacies of individuals or the smaller SME are being protected? And some of the AIs and data analytics is responsible and actually explainable, right? So you see any sort of good practices across the different markets?
That's a big question, Amelia. I think, sorry. So I think there's definitely lots of very good practices, in financial services, primarily because people are very concerned about the impact of doing the wrong practice. Is that a positive way to approach the question? Possibly not, but it may end up leading to positive outcomes, and outcomes where at least the ethical questions are being asked early, as opposed to firms going ahead and doing some quite aggressive innovation where the outcome then at the other end is a questionable ethical outcome. So I think there's a very strong risk awareness in a lot of institutions around how to balance that. And look, you're probably right that governments need to come in and provide a little bit more guidance and have these debates. And Justin was talking about maybe siloed type of legislation that comes in, which is creating some of these problems. But in any institution, there are people that are, let's say, more familiar with some of the tougher questions, and then there are others that are not. And I suspect that just is a reflection of how society works, including government itself. And there'll be divisions within government that are just not keeping up with the speed of innovation. And how do you regulate, and how do you debate some of the concepts that we're talking about when the legislators may not even be aware of how data can include or exclude? And I think the exclusion question is a really important one, because in a lot of the examples we're talking about, data itself and the way data and the analytics on the data is performed could end up excluding quite a lot of the community, be it individuals or SMEs or larger entities, because of how data models are created to screen whether the entity you're trying to assess fits into a bucket or not. And so can legislators keep up with that? It's an impossible ask, but the frameworks around it are the ones that we need to debate. And your question, how do we manage this? How do we think about good examples? I think there are lots of good examples, and actually the business that Letitia is providing as an example in many respects is doing some amazing work in enabling a huge community that previously didn't get access to funding, as an example, and that then creates jobs, and it stimulates the economy and all the the productivity gains that you get out of it. I don't know if any of us are qualified to understand yet whether there's a bad outcome or are even aware that there may be a bad outcome in something like that somewhere down the road, where the starting out intention was very positive and is very positive. So this is a really difficult challenge, and probably is beyond this forum in terms of the ethical discussion around how do governments even think about legislating this stuff.
But is there any country or any countries that you think has done a better job than the others in terms of doing the regulation or introducing some privacy law? So any good or best practice that we can all look to?
Okay, well, let's do a survey. I think the answer is probably no. But unfortunately, but let's do a quick survey. So on data privacy law, and when I say data privacy law, we are talking about principally personal data, identifiable data to an individual. The trend line consistently over the past decade has been toward ever increasing number of countries adopting what we call EU style legislation. The very famous GDPR is really the leading template around the world for most countries. And for those countries and major economies that have not yet adopted data protection law, They will soon, and it is very likely to integrate and align closely to the GDPR. And we look at examples from China, drafts in India. I think the trend line is very, very clear. What data protection law has not achieved and not been able to do in and of itself is define sufficient flexibility around research, AI, and big data initiatives to give us all the answers about whether and how we should regulate for fairness using that type of technology or research capability or big data capability. Data protection law tends to be an on-off valve. Either you've lawfully obtained the data or you've not. Maybe you have some constraints about how long you can hold it, in what form for security reasons, but beyond that, it doesn't really have too much to say about bias. It doesn't have too much helpful information for us around next generation transparency and what that means for individuals in a way they can understand beyond reading a lot of terms and conditions. It doesn't say that much for us, teach us that much about what techniques are best practices to keep that fairness quotient high while we're leveraging this data for good. So I think the places to look at going forward are probably not GDPR style traditional data protection laws, and instead we should look at the example in India and the example in Europe that have recently come out in the past year. I mentioned in India, in addition to discussion of a GDPR style law on personal data, there's a very significant body of work on so-called non-personal data, where they're trying to think about how you could create a structure where you have representatives of individuals in the form of some sort of a trustee, like representing a community or a class of individuals that have the ability to have some delegated negotiating power, bargaining power with the entities, whether it be government or private sector, that want to leverage certain data that's collected about people. I think that's a very innovative and interesting way to improve scalability. And as part of that initiative, the Indian government has been very clear that they are looking to enable use of data, not discourage it. So an enabling framework from a regulatory perspective is about creating brokers, data brokers, and authorized entities who can triage data collection and data sharing across society and in partnership with government. And the value of that type of thinking is that you get the benefits of government identifiers, you get the benefit of private sector identifiers. You have the potential, and certainly this is the government's ambition, to also democratize access to elements of this data. Now, there's a tension there in terms of proprietary algorithms, proprietary data that's been collected, and there's a recognition by the Indian government that there are some IP questions that are raised by this structure. And to be clear, they haven't yet proposed legislation, but we have a really clear working paper and roadmap with a lot of innovative ideas that I think speak to some of the elements that data protection law and the GDPR style things really don't help us solve. So that's one area I would point to that I'd encourage everyone in the WEF forum to pay close attention to. On the AI regulation side, and I'll do my best to be brief, it's difficult because the European Commission has proposed a new piece of legislation called the AI Act, which is part of its digital package, this desire to lift Europe up into a much more competitive environment on par with the United States and China, which are AI powerhouses. And Europe, not surprisingly, as it has traditionally, takes the position they believe regulation is necessary in order to create an environment where businesses can thrive. Why? Because they believe regulation enhances trust, both B2B and B2C trust. And they believe the absence of rules contributes to essentially a reluctance to either invest in or further develop these type of products. That's a regulatory philosophy. A lot of countries don't have that regulatory philosophy, but nevertheless, Europe does. And so it's not surprising that they've come up with really the first comprehensive proposal on how to regulate AI. And in this AI Act, the Cliff Notes version, which you will all get for free right now, is that they decided to say all AI is okay. unless it's prohibited AI or high-risk AI. So there's your cliff notes. All we need to know is figure out what's prohibited, what's not under any circumstances, and what's high risk. And so we won't go into that list. I commend all of you to the many, many emails that you probably have received on this topic. But what we can do is dig a little bit deeper into what is high risk. Now, the European Commission says high risk AI is okay to do. So even though we don't like that label and it makes it sound bad and evil, it's not bad and evil. Think of it as AI that must be governed. And governed AI, the things on the list, have some common attributes that are very interesting and relevant for financial inclusion discussion. On that list, we find applications that create risks to people of adverse or discriminatory decisions. So for example, if I'm using an AI algorithm to allocate a task as between Letitia, Amelia, Laurent, and Neil, what if the tasks only get allocated to men versus the women? Or only get allocated to somebody under a certain age? Or only get allocated? We see that there are some biases that are creeping into the application. And then, so that's, I think quite understandable. And so we say we want this governed. We want to think about bias. We want to control for bias in that type of, even a simple task allocation. And we see credit determinations on this list as well. And I don't think it surprises any of us that the history of credit determinations has been quite unequal. And I made the argument at the very beginning of our conversation that that's perhaps in part to bad data or incomplete data. But we know, I think intuitively, that there are a lot of risks of adverse decisions that are either unfair or unreviewable, or perhaps informed by data sets that themselves contain the biases, or there's bias in the application of an otherwise fairly neutral data set. There's a whole range. And so the AI Act in Europe contemplates special requirements to help keep that river flowing in the riverbank and not going over the sides. And so I think that is going to be a very influential framework that everyone should learn more about. And while it may take Europe 5 years to pass this legislation, it would take a jurisdiction like Brazil, India, or China 5 minutes. Take that draft and make it their legislated approach to AI. So we should pay close attention to those categories that are, really singled out as high risk, and not be afraid of high risk. We should embrace high risk, but we should do it in a responsible, well-governed way.
That's interesting, in fact, this one. And to see, how the regulator, which I assume, would have spent some time actually with different representatives, from the different tech companies, industries, etc., come up with a definition of high risk. High risk today versus high risk tomorrow, that's going to be a whole debate for sure. I think for the final part of this conversation, I'd be interested actually in hearing from you as practitioner of data and AI, right? Really as people, having to run a business, advise businesses, right? Take decisions. We've talked a lot about fairness, right? Responsibility. Very soft concept, philosophical concept when you think of it, but at the heart, at the end of the day, of how we want to use data and how the regulator will want to regulate it, etc. But for you, as individuals, as practitioners, what are kind of, in your mind, the critical elements that really underpin, a responsible use of data and AI? That's a big question as well, right? That's a big question, because I'm sure we can always point to a lot of different books and, summaries, of things. But for us practitioners, at the end of the day, how do you boil it down, to some critical elements of responsibility?
You've stumped us all. I think the word responsible use of data, that term itself, it's a very big term to contemplate, because where's the goalpost to judge what is responsible? Obviously, none of us go out to do anything that we think is irresponsible, and nobody intentionally sets out, well, unless you're intentionally doing something. But genuinely speaking, none of no responsible actor goes out to do anything irresponsible. But it's like so many advances that have been made in other fields in science, where science has progressed something so amazing, and the outcome of the science has been used irresponsibly, and that's the fear that probably we're all contemplating, that we don't know what we don't know. By all means, there's lots of organizations that are trying and innovating and doing some amazing work to enhance how data can be used to do something good. But equally, like in science, that innovation can be applied in a way that maybe becomes irresponsible. But your question as a practitioner, of course, when we go out and talk to our customers or try and talk to industry participants around solving material problem statements in the economy or in society, the intention is always to use data to try and solve problem statements that help solve a particular problem. In the private sector, clearly those problems are always aimed at trying to generate a commercial outcome. In the government sector, those problem statements may be trying to generate outcomes that benefit society in a different way. But I think the challenge there, Laurent, is the question on where are those goalposts around responsibility, and where does the boundary blur into becoming irresponsible? And that is a really hard question to contemplate, because the original intention may never have been anywhere near those goalposts. I wish I could give you a much clearer answer, but I don't think any of us intentionally go out to achieve anything that's irresponsible. But you're right to ask the question, because it's a very deep one.
I think we all grasp, with the reality of what does it mean for us concretely, in our day-to-day job. So, Laetitia, any perspective, to share on your side?
Sure. From our perspective, because we are in possession of huge amount of data, this data could be that we gather over time from the clients that we serve, and also we use third-party data as well. So one thing is that we have to be really sure that these data need to be adequately protected, so that it won't be leaked out to third party without the consent of our customer. That's one thing. The other is like the data quality, because although we are in possession of a lot of data, but we have to make sure that these data, when we train our AI, machine learning, those data are complete, and also is accurate, so that when the models that train out is something that we can use it. So I think data protection, data quality are very important, and then also is security, because when it comes to technology, there's always security attack as well. So we have to make sure we will have advanced technology to protect our data, our system. So I think these are a couple of things that from our side as a practitioner will be really be paying much attention.
I'll supplement what Letitia said. I really agree with Letitia's call out of security. And often, security feels like a very general recommendation for all data operations, but it's particularly interesting for our conversation today because there are special data security risks that are unique to big data and AI. And one of the ones that we don't talk about enough is the idea of data poisoning. So it's the idea of some adversarial actor injecting bad data into your data set for the purpose of disrupting your algorithm, basically training it on bad data so that it functions badly, but it thinks it's functioning well. And so this concept of data poisoning is a very interesting one that I just wanted to add to Letitia's big call out on security, because I absolutely agree. That is a guideline and a goalpost that we can all rally around, and it makes everyone nod and say, that's important. The second one, the other two that I will add to our list are actually invoked in the paper, Amelia, that you and Laurent put forward. One is on transparency, and we've had some conversations about the difficulties of achieving transparency with really complex topics with perhaps illiterate populations or underrepresented populations. But I think that there are some innovative ideas around how you can be transparent in a way that is workable and useful for people. And there's this reference to counterfactuals, I think, in the paper. When you get at the heart of what people really want to know and understand, why was I denied the loan? If you can answer, it was these three factors, and if they had been different, you would have likely had a different outcome. It's a pretty understandable form of transparency. So I think we should still believe in transparency because I believe it's an element of fundamental fairness. But really, the objective of transparency is not to surprise people in a negative way. We can surprise and delight people with new technology, but we shouldn't surprise and disappoint people. And we use disclosures and we use counterfactuals. We use all these things to manage people's expectations. And we want to normalize this for society. And that means managing unwelcome surprises. And then the last category I would say is this topic of bias. Bias has existed in society, it will continue to exist in society. If humans are making the determinations for financial inclusion, there will be bias. There is always bias. The promise of using big data and technology and AI is that we might even be able to do better than humans. But we have to work at that. So we have to develop tools for bias detection. We have to use adversarial artificial intelligence, pit the AI against the AI to really test whether those bias detection, bias mitigations are working. And if we can show statistically, empirically, and prove that the outcomes that are driven by AI are less biased than they would be otherwise, I think we will have contributed quite a bit to good AI governance. And so I think all the work that we can do in that space and continue to develop that will be helpful to the growth of the industry and will be helpful to the sustainability of financial inclusion models that are built on big data and AI.
Well, actually, I want to add one more point that actually I was actually discussing this particular topic in terms of auditing the AI. So a lot of times, in fact, what we realize is if you want to try to avoid the sort of the downside impact of over leverage in AI or the biases that the AI potentially will generate, is the first step is you got to audit your own AI algorithm. And this is itself, we spent 2-3 hours this morning and we didn't actually come to that much of a conclusion. How do we actually audit ourselves and keep a trail in terms of what is the result? Once you do that, you can then digest what exactly is the biases that they built, or is that actually inclusions that you're actually achieving. So there's a whole lot of topics that would at least be some of the critical elements I think every one of us that are in the industry will need to work on. Laurent, I think we have actually very, very good discussions from everyone here. I've learned a lot, and actually it's really good to meet all of you.
Absolutely. No, I think that was first a real conversation. I think there was really ideas being exchanged and very honest, answers, even, in the limitations that we all face, as practitioners, in making decisions, in using the tools and understanding the regulation. No, really, really enjoyed that. Thank you all really for your time, really, and sharing really so openly, your own, insights. I'm sure we could continue, further the discussion, and maybe there will be another opportunity, around this. It's a very dynamic space. So I'm sure, a few months from now, there will be something new coming up. In the meantime, thank you again, really, for all of your comments.